General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Hello, everyone, and welcome to today's episode of Bulls vs. Bears Global Alpha Edition. I'm your host, Finn Judell, and I'm with your co-host, Richard Nader. And Nader's going to walk us through some big names on earnings this week. Nader, what's going on? Tell me about it.
Look, at NBC, we've been pretty big on the sort of the tech AI theme for about I'd say over the last 12 months. So really we see a culmination of some of our biggest long-term recommendations or stocks that we've been watching coming into fruition of their earnings for the start of the 2026 calendar year. So you can see we've highlighted those on the calendar for our clients there. So you can see Palantir, AMD, and Google and Amazon being the major FANG stocks, but Palantir not being a FANG stock, but some of the larger tech stocks that are reporting for this quarter. So we're holding out very strongly on those earnings announcements. I know we've had a bit of a spanner thrown in the works with the new chair of the Fed being appointed, and a few of the stocks we've seen slipping off the back of that sort of appointment. But in saying that, these stocks have there's nothing really changed for those businesses overall. Particularly with that appointment of the new chair Fed. So
I think the overall consensus has been that the new Fed chair is hawkish, but that's not necessarily the case.
Mm-hmm.
And I think in terms of Trump appointing anyone, you can expect that person to be dovish, given his stance on interest rates over the last 12 months. So, he did say something about being anti-quantitative easing. Mark talked a little bit about it earlier on the morning call, so he's probably a bit more knowledgeable than I am on the topic. But it seems like sentiment is that he's fairly hawkish, but we tend to argue otherwise. So that could be a little bit of asymmetry in the market to take a bet on some of these big names. And Google, particularly on the AI play, I'm really impressed with their new Gemini product. I think it's called Banana or something. I can't remember. I don't care. I use it. I love it. It's one of the best models at the moment, in my opinion. But yeah, keen to see how these other big names report. Is there anything kind of, particular standing out for any of these companies, or is it just kind of business as usual?
The one you just mentioned, I think Google is going to be really interesting, particularly because I saw with Meta, they've had quite a good announcement, their most recent earnings report. And a lot of that was ad revenue. So we know Google sort of it's very dominant in the ad revenue space, particularly in these larger tech stocks. So just cited that, I think they could surprise on that front, as well as, they've had all these sort of higher level developments coming in, their AI models, their Google Cloud and things like that. So I think it's in a really good position, and I don't think it's had the run that some of these other tech stocks have had. So that's one of my more favorable recommendations that earnings that will be coming out next week. I think Palantir is in a really good position as well because it's not drastically affected by the AI trade. We've seen them win some really major new contracts in the last 2 to 3 months, particularly in spaces even like Australia. They've been approved as a partner with the Australian Government and Defence Force. So they've gone through the checks, they've met that criteria, there's no concerns for the Australian government, and they've said, yep, we're willing to work with you on whatever they're pretty guided with whatever they're building, but whatever project they're working.
It's surveillance software, right?
Absolutely.
So I'm not too big of a fan of the product, but in terms of owning the stock, I mean, you gotta differentiate yourself somewhere, right? And if there's demand for the product, it doesn't matter if I'm not the consumer. It's the government's. It's big corporations. I'm not the consumer. I don't want to be. Unfortunately, I am though. I'm a product of the consumer. Yeah, that's right. But no, it'll be interesting to see how these ones perform. We are fairly bullish on these. So interesting to see what the next couple of days unfolds. Um, kind of,
That's tonight after hours. I think for breaking ground in new markets, there's only really going to be an extension of that sort of revenue base that they've created in the past. So I'm pretty
yep,
confident on that one.
yep, yep.
And that's after
Great.
hours. Google that we mentioned before, I think, is on Wednesday evening as well, after the
Okay.
US time. So our Thursday morning.
Yep, yep. Keep an eye out. Keep an eye out.
Mhm.
Um, look, kind of moving on, bit of a segue. But look, over the weekend, I was doing a bit of digging. Obviously, we've had this big pullback in the precious metals rally. Very speculative kind of asset. But I was looking into the kind of metals industry as a whole and found a bit of interest in copper. I think particularly because it's not a hedge against the economy.
Mhm.
It's actually a hedge on the economy, or it's a bet on the economy. It's a bet on increased AI data center rollout, increased electronification, increase in EV demand, and just generally increase in you know economic movement, right? And so what I find particularly interesting about copper um, is they're projecting that it's capitalism 101. The supply won't meet demand. And I've kind of put together a little graph based on projections, in that the gap between supply and demand is expected to grow. We expect to peak in supply around 2030, with 42 million tons output per year. And then from there, it's actually expected for that to drop. And in 2040, sorry, those numbers are expected to come back to lower than it is today.
Well,
And the reason for this is, there's a lot of current mines that are expected to kind of actually run out of copper, or for what do they call it? The production quality actually becomes a lot lower over time, and so the projected output is a lot less. And the amount of new mines being put into production, it's going very slow. And a number one reason for that is environmental concern.
yeah.
It is a very strenuous on the environment,
Mhm.
not only the mining, but also the refining. The whole process is quite strenuous on the earth, which is kind of interesting because it's a key component to things like solar panels, EVs. So it's a little bit of a catch-22 there, but that's actually amounted in a lot less new mines coming online, and the time frame for a new mine to actually come into fruition is around 17 years, and there's not a whole lot of new activity in that area. So they are projecting that gap to widen pretty significantly, with a 20 million ton deficit by 2040, which is massive.
Well,
So in terms of the underlying, there's a couple ways we're looking at playing this. And it's not as simple as, buying silver or buying gold. So definitely keep in tune with, what we're looking at over the next couple of weeks on how we actually intend to play the copper strategy. It's not quite as easy as buying the underlying. It's also not quite as easy as just buying any miner, because the actual output of production is going to be quite low. But we are building some strategies around this. So definitely, my recommendation would be to sign up to Mosaic. We will have some kind of articles on this coming out in the next couple of days, and potentially some investment strategies going live this week or next. So sign up to Mosaic. You actually get a 30-day free trial, and you will get some access to these investment strategies. And you better see what we're thinking about in this particular asset.
yeah.
Fantastic, guys. All right, that's all for this week. We'll catch you in the next one. See ya.